All right, YouTube family, or Apple Podcast family, or Spotify family, however you listen, let's talk about crypto. You've probably heard of Bitcoin, but crypto is as much, or is a much maybe broader idea. Think of it like this. Crypto is like the world of sports. It's a huge category with lots of different games. Bitcoin is like basketball, the first and most famous. Other cryptos are like football, soccer, or baseball, different games for different rules, and we'll talk about those in this episode today. This episode is brought to you by Stonehill Wealth Management, where we help our clients invest money into the future. Let's talk about Bitcoin versus the rest. Other cryptos. Bitcoin is often seen as digital gold, right? Or like the savings layer of cyberspace. People use it to store value, and it's also used as digital cash for online purchases. Governments sometimes treat it like a digital commodity like oil or gold as well. Other cryptos are more like digital tools or shares in an online project. They run online programs, are used on specific websites, or function sort of like stocks. These can be seen more like equities, which are stocks. Different way of saying stocks. Why does this difference matter? Just like basketball and football have different rules, Bitcoin and other cryptos have different uses. Because Bitcoin is seen as digital gold, it's treated differently by governments, corporations, and savers and investors. The rest are treated more like stocks. So sticking with the sports analogy, let's look at the different other types of cryptos, right? You have smart contracts and decentralized apps, or often referred to as dApps. These are, the best way to describe it is, imagine computer programs that run automatically online without needing a middleman. AI, financial AI, if you will. These programs can handle financial agreements, online marketplaces, or even social media. Networks like Ethereum and Solana let developers build these apps. Decentralized finance is another type of crypto. Think of it like online banks without needing the banks. Platforms like AAVE and Uniswap let people lend, borrow, and trade cryptos directly with each other. Utility tokens is another type of crypto. These are like digital tickets to use online services. For example, Chainlink provides data to smart contracts, and Filecoin lets you rent out unused computer storage space. That's pretty cool, like an Uber. Like think of it like a Uber for computer storage space is a simpler way to say that. Stable coins. These are like digital dollars designed to keep a stable value. USDC, which is a US dollar stable coin, or Tether, USDT, those are examples, and they are used for stable online transactions. Let's talk about what makes crypto prices go up. Like any other asset, crypto prices are influenced by supply and demand. So if more people want to buy, the prices go up. Utility. If a crypto has real world uses, it becomes more valuable. For example, the Apple iOS system is a utility that makes the company of Apple worth a lot because it's a very effective software protocol for allowing users to experience the internet and allow people who are selling stuff on the internet to access those users. Market sentiment. People's feelings and opinions matter a lot. And this is like one of the most underestimated part of investing is people's feelings and opinions. That's where logic breaks down and people, I don't understand why. It doesn't matter. Like your opinion doesn't matter. The new generation opinions matters. Technology and development. Improvements make a crypto more attractive. Government regulations. Good regulations can boost prices. Bad ones can drop prices. This is one of the conversations I've been having. And it's not a political statement, but I had a client ask, hey, what's the difference between why all this stuff is getting done for crypto and everybody's consolidating around it now after the election? Was it anything that Trump did? And I was like, it's more just what Biden did. Biden was very heavy with terrible regulations that was stifling growth for the industry. And the Trump administration, which the whole team are pro technology and innovation, just said, hey, remove those regulations. Let's not overparent the industry. Let's let it grow, right? And that is allowing lots of capital to form. We haven't really seen it in price yet. We sort of got a little teaser bump after the election, but like from what I'm seeing in my perspective, we're really about to see it. Like the next 4 years are going to be nuts. Economic conditions. In shaky times, people might turn to crypto. And that people may say, what does that mean? Shaky times, people are going to turn to crypto. Isn't that risky? Well, 2 episodes back, I talked about risk is not volatility, or volatility is not risk. Maybe that's like 3 or 4 episodes back. But what I mean by that is if you go to countries outside the U.S. where the government currency has just basically failed, right? Just about all those countries are using crypto because when you understand global finance in the traditional system and this system, if you really did the work into detail, you would say like one of the most risky assets you can own is government currency, right? Because of centralized control. So, question somebody asked, why not just use stocks instead of a crypto token, right? One reason is community ownership. Crypto can give users a stake in a network, creating community. Global reach. Crypto can reach anyone online, anywhere, which is a trend of where humanity's going. New ways to raise money. Cryptos can be used to raise money directly from people online. Take it from somebody who's in the regulated investment industry, and you say, hey, if I want to, raise money from the public for my company, right? How hard is that process? Like very hard, very expensive, like millions and millions of dollars, lots and lots of time, very hard. But with a crypto token, with the technology now, it can cost less than $100 and like not that much time to issue a token on the blockchain to raise money from your community for your company, right? And we already have rules in place to like just not lie, cheat, and steal. So it doesn't need to be, a lot of extra regulatory stuff around that. Just follow the existing rules. But if we want more prosperity for more people, you got one option where only rich people can raise money from the public markets, right? But if you want more people to get more rich, crypto is a way to allow us regular people who don't have $10 million or $40 million or however much it costs to raise money in the public market. Oh, and by the way, then you got to keep paying all that money every single year to maintain everything, right? It just creates another way for people to raise capital for their businesses to support their community. Like it's progress. It's like at one point, people who can read were ordained but were approved by the authorities in the church back in the day, right? Now everybody can read. Education is democratized and it made more prosperity around the world. Now same with capital. Innovation. Crypto allows for new kinds of online communities and economies to be built and evolve, right? So let's talk about the future of money from this context. Many people believe crypto is the future of capital formation in a globally connected internet economy, which is what I just described, right? Because basically, like, crypto can make investing accessible to anyone with the internet, right? I mentioned projects can be raised easier from people from your online community. The other part that's really good is people can own small pieces of big things like real estate. This is my intuition. There's nothing concrete out there yet, but you're seeing private equity getting into things like sports, buying sports teams. You see, you actually do already see real estate developers listing properties on the blockchain. It's called real world assets on the blockchain. And so let's use sports for an example. A private equity just bought the Boston Celtics for like $5 or $6 billion, something like that. Like, I would be shocked if in a decade we didn't see the ability for fans to own a piece of their favorite basketball team. Like, I would just be shocked that that didn't happen, because it's going to increase the valuation of the team because you got more money coming into it. As a sports fan, I would love it. Like, I would love to own a piece of the Houston Rockets in my digital token on my phone. And it would even be less about the profits and just more about the coolness of it, right? The profits would be great, but it'll be more like art for me, right? So that would be cool, right? That's coming. Also, decentralized organizations, right? Lots of these decentralized organizations, meaning groups can make decisions together about how money is used in an easier, more transparent way. Speed and efficiency, right? Crypto transactions are fast and cheap. So imagine a future where humans, AI, and robots all interact in a globally connected internet economy. Crypto, in my opinion, is going to be the foundation of how we raise money, invest, and manage resources in this new world. And while there's challenges, crypto has the potential to make finance more accessible, efficient, and democratic. And when I say challenges, the challenges are like we invent electricity, and the challenge is, right, how do we rewire the whole world without having fires? This is not possible. Like, you're just going to have fires. This is going to be things that are part of the process that as we learn, but having electricity is better than like not, right? I think we all can agree to that. So if you're watching on YouTube, make sure you like, subscribe, hit the notification button. Thanks for listening. Be fruitful and go multiply your money.
Philip Washington Jr. is a registered investment advisor. Information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies. Investments involve risk and, unless otherwise stated, are not guaranteed. Be sure to first consult with a qualified financial advisor and/or tax professional before implementing any strategy discussed herein. Past performance is not indicative of future performance.